Wow, this is really cool. Good topic.
But this is real spring.
Yeah. Hello, leaders, achievers, and inspirers. Spring always comes after winter is the topic for today. We use this phrase or idiom during our tough times to hold on to the confidence and to come out of the worst situation we have. We are already 1 month into the spring, isn't it? Hopefully, everybody enjoying the weather, planting trees, spring blossom, and kids and pets are playing outside, and you are enjoying seeing them proudly, getting ready with the garden work and plant beds and all that stuff, right? Wait a minute, are we really enjoying it the spring? No, right? COVID-19, this
No.
all as our winter inside our homes, and then we are not going as much as outside we want to be. Okay, that's okay. This winter maybe extend a little bit. How about going into future, right? So is this COVID-19 is going to bring any downfall into the economic winter? Economic winter, I phrase it as like a season. Every economic cycle will have up and downs. It has summers and it winters and fall and like those seasons. So in winter, we try to be inside the home and protect ourselves from the winter and survive. So when summer comes, we all try to go out and enjoy. So we want to do the same thing during the economic down times, right? So are we going to a recession? I'm not sure. Maybe or maybe not. But we want to be ready. So yeah, in a cycle of growth for any country, any state, we'll be having a fast growth sometimes and slower growth sometimes. But what I feel is that shouldn't affect our personal life. So personal life, most of the our in our life, our biggest investment, I don't consider it as investment. I consider it as an obligation, but most of the people think that their biggest investment in their life is home. So that's how what they spend most money on, and they think that it should be protected, and they want to have it throughout their life, right? So, so I'm wondering, is there any financial product we have that protects us from not losing our homes during these recession times, right? So whether recession comes or not, I don't care. But is there any product that we can take care of us? And when we go into the recession last 2008, whoever observed, right? You might be seeing um, a lot of our credit history goes down. Cards decrease our credit limits. Even America's credit worth rating goes down. So everybody, all the countries, persons, companies appear to be less trustworthy. So to be uh, what are the trustworthy we are right now when we have a job, when we have cash, when we have all our stocks up in the market. So well, I want to take some part of it to be as trustworthy as today. So is there any product that saves some of our trustworthiness and credit worthiness, right? So, and if it exists, does it cost anything? So, and what is the best time to apply? And am I going to qualify? Is there any conditions on it or things on it that that makes me yes or no? So, and by having it, do I feel secure? Is that enough? So, for all those questions, we are going to be looking into it one by one. Yes, there is a product, and it is called home equity line of credit. It is not a loan. There is also a loan product. I suggest to not go with that. So home equity line of credit is something like, I'll show you an example later on, but between your loan and how much net worth your home is right now, between difference between those values, you can get a loan from 70 to 90% of that loan to value difference. So depend. So sorry. So that is the maximum loan we can get. So and how much it cost? For me, it costed $0 for application, processing, appraisal value, and appraiser come to see and me, attorney charges, and there is another attestation charges. I didn't pay a single penny for all of it. Most of the thing my credit union took care of it. Only thing I had to do is I had to take a $20,000 for 3 days and pay them back. Maybe I'm paying a interest of like $50. That is maximum I spent on. So it depends on the financial organization you are working with. It might cost anywhere from $0 to $200. Basically, closing cost is free, but you have to take some money one times to cover the complete cost out of it. So it is like a $0 to $200. Maybe they'll ask you to take once in every 2 years the same amount, which will cost again. You take the same amount for 20,000. Even if you were 100,000, it is granted for you. You just take 20,000, pay back in 3 days, which might be you might be paying like $50 or $70 in interest for those 3 days. So it doesn't cost.
One question. So this is this home line of credit. For example, if the home value is 500,000 and
I'll come with an example right
now. Okay, go ahead. Sorry.
Yeah. So when do you apply? When do you get the maximum loan? What is the maximum amount that you're thinking you want to get, right? So nobody knows what is the peak of the market, right? So whenever your gut feeling is that it is the peak of the market, that's when you apply. And I am applying now thinking that this COVID-19 might affect or it might bring down a little bit of the market. And beautiful thing is that these appraisers take the value of last 3 to 6 months. So of the transactions of the real purchases that are happening. So the last 3 months, because of COVID, nobody sold. It doesn't count. The people who sold it, then that's what it counts. And that is the average of the same square foot, same type looking homes and things like that they take into consideration. And they come up with the appraisal. So whenever you think market is the peak, that's when you can choose your gut feeling and apply them. And yeah, as far as you have a home and there is a difference between how much it is worth and how much loan you have, you can qualify. Certainly you get some amount, but whether that amount is enough for you, you want for that. Maybe if you're getting just $20,000, whether you want to go with it or you want to wait and it is not worth of your time, that's all depends on you. But if there is a gap between how much loan you have and how much it is worth, Zillow, whatever it estimates, that should be the approximate guess of how much your home worth. That should be always reasonable, trustworthy figure to focus on. So, like, let us suppose if it is approved, and do you feel secure about it? Of course, you will feel secure because you will have access to this how much around 1 year worth of your salary, maybe, or 6 months of salary, maybe. So, if you don't have a job, if you want to keep paying your installments and take care of the expenses, even if your home doesn't have any expenses, you want to spend those to take care of your business and other areas where you are investing, or maybe if you think that gold might be a better investment that time, maybe you can invest there or something like that. So you have, of course, you will feel secure once you have the loan. So as I mentioned earlier, if the recession doesn't affect you, right? So what happens? So you take the loan and you still have the job, your wife works, you guys are doing good. So what you do that time at least house prices, everything goes down 20% minimum. And then people who paid $850 at least in my area for those houses are going to come for $600. And at the same time, rental properties, because so many people loses houses, rental income goes all of a sudden very high, because everybody, big people who has a $10 million home, they come into 10,000 per month rental home, and then like a $1 million people come to less rental home. So everybody tries to rent at that time. So for any kind of size of home, you find a renter, and renting income goes at least by 30% up during the recession. So that time, buying a property and giving somebody rent is a good real estate investment. So you can buy those, or you can buy a business that's selling low because of the recession that might grow good when things are go fine later on. So like every season, winter is a tough time to save our food and survive and things like that. So these we have to keep ourselves warm and survive until the spring comes, and then so that things get better. So these are all the all the questions. So these are all the solutions. We went through each of them, and then this is an example, right? So this is from the website of Department of Commerce Credit Union that is local to me. I applied credit unions because they're less greedy than banks, and they give you more loans. And at the same time, credit unions are mostly local. They trust the local houses and local investments and local people. So that's how they give you the maximum value. If I go to the, so this is the my house. I bought it around 630, and when I applied for this home equity line of credit, my loan is 520K. So basically, difference is how much? $220, 20K probably. So around that loan to value, you can choose anything between 70 to 90%. So the more, if you choose 90%, you might get more interest, prime plus 0.75. If it is 80%, it is prime is the interest rate that you will be paying on the loan that you are taking. So if it is prime, if it is 70%, you pay prime minus 0.75, like that. Interest goes down if you take less amount. So because they are risking more of their amount in there, so they want to collect more interest. So here, for these calculations, 147.6K is the credit line I am eligible for, but I applied less 120K around, and I got approved without any issues, thinking that I'll get 90 or something, but I got maximum approved. When they appraised my home, I wrote 730, they gave me 730, but recently when I checked Zillow, it showed me 740, so I just used that as part of my calculation. So basically, this is all loan to value. It doesn't matter how much bank appraised your value when you took the loan. It doesn't matter. So it depends on the how much it appraised now, how much outstanding home loan you have on the current house. So this is example. So basically, usually debt. I spoke about this previously, but I just want to reiterate that. So when times are good, everybody is doing good, you have a job, then everybody gives you credit cards, even if you don't need it. So, but when it goes down, when you don't have a job, when you need when you need the money most, then that time they'll decrease your credit limits. They won't trust you anymore. So all of a sudden you become untrustworthy for them. So for all the financial companies. So what it does is, so when growth is good, we are looking more trustworthy, and all of a sudden we are becoming less trustworthy. So because of the federal laws we have, this line of credit, they cannot remove from you once it is approved. That is against the laws. So you can, even if they come to know that financial institutions, you don't have a job, then they can't cancel your loan line of credit. So basically this graph is, that's how it is looking like, but in general, I'll make it as a straight line by applying this product, because you are still worth to be same credit worthy as you used to be before the recession. So that is the beauty of the this product. So basically, I'm assuming that we should all protect our homes during the winter, which is the economic winter in my language is, I feel like it is a recession. Whether it comes or not, I want to be prepared for this. So I want people not to have this knowledge or lack of a knowledge that people shouldn't be losing their homes. And at every recession, people lose home just because they cannot pay 3 to 6 months of their installment. So if you're able to survive 3 to 6 months, you will be able to survive one recession. So like a recession average cycle is like 8 to maybe 14 years, right? So in a lifetime, if you are able to, our peak earning period is 30 to 60 years. So during those times, if you maybe 3, 4 recessions we need to survive, then all your investments are going to be survived. So we need to survive these 3 recessions so that I want, you might lose in other businesses, but at least securing a home and kids not feeling bad and family not feeling worst of the economic impact, I would suggest all the people to apply and secure their financial freedom up to some extent, so that home is more than a house where you have feelings attached to it. So let's secure by applying this. So yeah, these are like two things. The Department of Commerce Credit Union, where I brought the calculation from, and YouTube, you have a very good video about the life cycles of the economic downtowns and things like that. I posted this while ago, but I'll repost this so that everybody can take an understanding of how things work in economic world. So it is not the end of the world. Only 10% people lose jobs and things like that, but it will be having drastic effect on companies. So yeah, rest of the world is like 80% of the people are doing good. So that should be the thing we should keep in our mind and do things. Yep, that is the end of.
Awesome. Great job, Srinivas.
Thank you so much, Srinivas. Very well done.
Yep, very well done.
Lot of wisdom in like maybe 20 minutes. So one question I have, I think like maybe everyone can chime in here. So for example, you have a loan with one bank. Do you think you can go to your local credit union to get a line of credit?
Yes, yeah, local credit unions is the best thing I would suggest, because they are local and they don't run them for profit. They're a credit union. So if they give the profits to the share account holders of the credit unions, so that makes things like they don't need commissions, they don't need anything else. They work for the benefit of the people. So that's how whom we should be considering. And you are taking money here, you are taking a loan here, you shouldn't bother whom you are getting from. So if you are giving money, then you should think like, okay, oh, I need to they're not trustworthy or something like that. I'll take money whoever gives me, so I don't care.
Okay, so how about like maybe do we need to inform the bank that we are taking a line of credit, or the credit union will talk to the bank?
Yeah, okay, bank, they don't need anything. We just need to apply directly to the credit union, but they might ask a couple of documents that you might need to reach out to your loan with which you exist. So they might give you the document. One of the document I was missing, they said we gave you, but they never gave me. But when I reached out, I sent them, okay, you don't understand what I'm saying. Give me whatever you have. Then they sent me the correct document. So basically, they don't even know what they have. They just have them, because banks are so organized in a way that, okay, who gives the loan, who gives the servicing. So they call it a servicing because they just generate the letters and get the money paid to their accounts every month. And they pay it to Fannie or Freddie. They don't even know what they're doing. They just run the process. So yeah, so basically, yeah, you might need 1-2 documents, but you just you don't need anything else. Probably you will have all the documents you have at home, and then you just upload and apply online.
Okay.
So both the banks will be your lien holders?
Yes.
Both of them together?
Right, but at the same time, first it will goes to the your current outstanding loan, and then whatever is left, then this credit second
I see.
will take it. Yeah.
I have one more question, Srinivas. What's the typical interest rate on this HELOC loans?
It is like it is variable, so it is prime plus or minus whatever. So it depends on the prime. So what is the prime? So prime in recession usually it can go to, of course, Fed will bring it to zero, but these banks will give it to either 3% or 4%, right? Usually it is 1 to 2% more than our regular home loans.
So it's about 4.5%, about.
Right. If
roughly
regular home loan is 3.5, this can be 5 or 5.5, something like that. Yeah.
And only when we, if I get approved for 100K HELOC loan,
Right.
I have it as a safety. But whenever I take it, and for the duration of for the duration I took it, only for that duration I have to pay the interest.
Yes.
Right.
Yeah, that is the beauty. If there is with the same HELOC abbreviation, instead of line of credit, it is loan. A loan also include a line. There is a loan term, so don't apply for those ones. Loan is like you have to take that 120K. No matter what you do with it, they don't care. You still keep paying it. So we don't like a loan. This line of credit is like something is approved, but we'll use if we need to. Otherwise, yeah, it will be with them.
So after you mentioned in one of our calls about this HELOC, then other friends also mentioned that apparently this is like a kind of this is used as a best practice at this time of life, like during the downtrend, as you said.
Many people don't know. I myself, couple of friends, like one person is like 50-year-old, but he had like 25-year IT industry experience and all, but he lost his house because he didn't know that it exists. So,
how did he lose? I didn't understand that part.
because he lost his job, he couldn't pay for 3 months, and they banked on his house because if I'm not able to pay, right? So, and I have a loan of 520K for 4 months, then they'll come and sell my house, and they take the 520K and they give me the remaining 30-40K, whatever it is worth. So all my 100K investment at the beginning, everything going to trash.
So that's what you mean by losing home. Okay.
Right. Completely you lose home. You get 30K, but it is not worth. It is worth so much 740 at this point of time. If you take, but if you have the gut feeling, if you have the strong investor instincts, even better take out refinance and take out all the money and leave only 20% in the home, so that cash out. Basically, I'm asking you to cash out 150K or something, if it in my situation, so that you can cash is king during recession, right? So
I see.
and
so you can. One is losing home. The other one is, even if you don't lose, you are okay. Even if you are economically doing okay, take this money, put it in your bank account. Right. And invest it like you were saying. What are the rental properties?
Right. Yes.
I like that idea.
Right. But rental, yeah, maybe just be recession coming and rental time increasing. There is a gap of 6 months. So that 6 months you need to plan little carefully. Otherwise, it's not like recession came today, rental properties won't go up. People have to lose their homes and come into rental properties, right? So it takes like about 6 months. So yeah, we can't be aggressive on that, but you should feel good that you are getting a cheaper home. Yeah. Like during recession, everywhere market goes down. But if you want to invest on a real estate property, military areas, and those, no matter what, those areas you get rental income. And those military people, they won't buy homes at those areas because they're not living there. They just come for 3 to 6 months of camping and they go to different area. So you can invest in those areas. So like in Texas, Austin, there are some areas and things like that. So there are all over in US, but you can explore where are closest to you or where you can drive and fly or 1 hour and check out if things are going good or not. So
Great job. Thank you so much.
Can we refinance when we have line of credit exist? Or if I want to refinance, then can I close this line of credit when I feel comfortable?
That is a good question actually. So because I got all this for free, I have to keep this for 3 years. So if you are closing early, you might need to end up paying closing cost, which will be like how much? 15,000 or something. So that is one risk there. You have to keep this open for 3 years. But what I would suggest is if you are planning for applying for HELOC and refinance, do the refinance first and then HELOC. Don't think too much about the interest because like interest is very peanut, whatever the home interest we are paying. And I don't think it's much. We shouldn't give, because down the like 20 years from now, 3,000 mortgage I am paying. If you take the PV of it in a reverse calculation, it is like a $300 right now. So it's not worth. I know people around here who bought a house for $80,000 around 25 years, 30 years here. And then now see their mortgages, how much they're paying. Like maybe they're paying $250 per month or something like that. So they're still paying, but those houses are almost $1.5 million worth now. So they don't mind. So basically all these rich people and Facebook, when it went public IPO, the same day Zuckerberg took out of his 600 million home, he took 80% of it loan because he doesn't have money. The same day he went public, he has a lot of money. Only thing is they want to take the less interest rates and invest somewhere they can easily make money. So that's how we should be calculating things. It is all about putting numbers here and there.
So never pay back your mortgage fully is what you're saying, right?
Right. Yeah. If you are a
because that's very
financial personal planning person, don't keep more than 20% of it anytime in it. So and a very good thing about this is banks, because out of my 7, let us suppose for calculation purpose, my house is 600K. And if I have a loan of only 350, I'll take out the remaining and put only 120 cash in it. So when market goes down, it is only 500K. So banks will be losing at least 100K on it. But they don't try to sell your home. If you ask them 3 to 6 months, please give me 3 to 6 months, I'll pay everything, then they'll trust you more because they are on losing side. They don't want to live. But to see the more equity, they try to grab their money and then give you the rest of the peanuts you have during the recession when they're selling it for cheap outside. So take more out of the. You have less equity so that they're afraid even to take your home. So
what is if I take loan, right? Like, so if I do refinance, as in that my home value is 500 and I have only loan of 230 or something.
Right.
Maybe by doing refinance, interest rate will go a little down, and at the same time, if I do cash out also, then they'll charge little more extra interest rate, right? Because I'm doing cash out.
Right.
So then I'm taking the money what I paid already out,
right.
and just keeping 20%, and but you are just directly taking the cash out, and your interest rate will go up a little bit. But but you're okay. I'm just comparing this with that, like.
The difference of interest rate you are paying, that's very nominal, I would say. Meaning it doesn't affect much of your life. Maybe you pay $20 more every month. That's all. So, or like $100, but that is worth than not having money, when you see the very fruitful business, you want to chime in and you don't have cash with you.
So
So you're say,
sorry, go Shashi.
so you're saying every time, like how our auntie used to do, every 3 years, take a loan, refinance, and put it in somewhere investment, and to pay for next 3 years, and again take loan, put it somewhere else. But
you
your
have
home
to,
value is keep
but you have
continue
to be
paying it.
careful where you put the money, right? If you don't,
Of course.
you just want to make a movie, invest in film industry.
No. Something like
whoever distributes movie, right? Follow the stats. 90% of the movies are flop. So, do you want to go to an industry and invest in where you are losing money? No, right? So, yeah, go to an industry where success rate is more. Even if profit is less, it doesn't matter. So
Srinivas, this is Amit. Great presentation. I really liked the understanding of home side of things, which I've never seen through or thought through also. So I'm asking this question. I'm not a homeowner right now. I'm looking to purchase a home.
Okay.
Does it also mean, let's say if I'm looking at $500K property,
okay.
and let's say I was planning to put in $100K up front
Okay.
To take the loan, does it make more sense in this case now, because of the entire model that I see now, to put the minimum amount in the house right now, still pay more on the other side of the interest and the this home insurance thing that they charge?
Right. I would say first thing is yes, because you gave the number you gave also make me tell that, because 500K. So anything less than 550K, that is having a loan is good, because federal government is not giving the benefit if the loan is more than 550K. It only gives the benefit to the first 550K. So yeah, for sure you need to put, even if sometimes they take it even 3%, maybe not during these like COVID times, but in general, you can buy a home if you down payment only 5% of it. So I would strongly agree.
So minimal investment in a 5%, whatever they can go and go with it.
That's right. Yeah, go with the insurance. Yes.
Got it. Thank you.
Yep. I just wanted to add, because my agent also suggested the same, Amit. He wanted not to spend more than 5% if possible, because the other money you can use for another investment, which can fetch you more money, because cash is king. So that's what I also learned from Srinivas and my personal agent. So yeah.
And also one quick thing I want to add, Amit, because this COVID is, everybody is holding, not selling the houses. Somebody think that it is peak and they're trying to sell, but buyers are want to play wait and watch. So during the winter time, when when there is lot of snow, and if it is the end of the month, and these new builders are not doing any sales, those days in our areas, particularly East Coast, if we go that day, end of the last 3 days of the January or something, you get the better deal. When there is a worst snow, go on that way. So these sellers will give you better incentives. So, and this COVID effect also will get into the market. People who couldn't sell this summer, they wait till next summer, but who desperately need money, they might be selling. New builders, or even the old homes, people might be who are in desperate situation, they might be selling. So that would be the best shopping time, I think.
Got it. Makes perfect sense.
Absolutely. I think like one key thing, guys, like I know a couple of you planning to invest, always ask, for example, house price is 300,000. Start like maybe the bottom number. Nobody's going to say, hey, you're really like maybe asking low price. Maybe you need to just like do your research. Start like maybe 180 and see, you never know. That is like something that I learned from Richard Branson. He bought a Necker Island for 300,000. At that point, the island cost about like maybe $10 million. That is what like he had. That is what he offered. They said like, go out from my island. I'm not going to be even talking about this island. Then few months later, that guy really needs some money. And this guy came to mind and picked up a call and said, do you think you can raise a little bit? He said, yeah, I'll try. Now he owns the island. It's like a maybe multi-million-dollar island.
Wow.
It's like a Koti, Hyderabad. They say 200 and we start 10 rupees.
right? So always we think, okay, we need to just like, oh, we are professionals, like, but see, these are like multi-billionaires. They are doing that one. So they say like
in the market one time only, most of our house buying, right? So play the game very extent, whatever extent you can, because you won't be in the market 10 times buying 10 houses, right? Of course, real estate one time, first time you buy, you keep adding, but I would suggest for first time home buyers, play all the game you want. In 2012, everybody, like by all calendars, people thought that it is end of the world and things like that. One guy really believed it, and he sold a $2 million home for 650, 700K, because somebody asked it. He want cash that week. He closed the deal because he thinks it is end of the world. He want to hide in the basement or something like that. So he sold all his properties. He sold for 1.3 million difference. So,
right.
So we never know what's going on. Sometimes kids might be crying in their homes. They don't want to talk long time. They'll say, okay, whatever, take it.
Srinivas, quick question. This is Anand here. Thank you so much. Well organized content, really timely input for all of us. I see it as emergency fund, right? This is good. Do we have any annual fee if we have to maintain? Even though, for example, if I am approved for 25K, assume I'm not taking it. So what will happen? So every year, do I have to pay annual fee to keep it active?
So some banks have this policy of, okay, you should pay a fee or take a loan of minimum certain amount. So in my case, they are asking me to take minimum of 20,000. So every year, maybe I'll take that 20,000 and pay in 3 days. So I'll pay the interest for those 3 days as like $70 or $100, max 200. So that is I consider it as a fee. So yeah, but basically there is no fee as a fee. Yeah.
Okay. There is no annual fee. It's same like credit card lines. We can keep it open and.
Yeah, they might put you a big fee if you are not taking maybe. So what I do is I just take 20,000 and pay in 3 days. So I don't need to pay anything.
Got it. So that's okay. That's a good thing. So we need to take the money out at least once, right? Once it is approved.
Right.
Each year. Okay. Got it. Thank you.
It is like paying a premium of $70 every year to have that line of credit.
Understood. Thank you.
Excellent presentation, Srinivas.
Thank you.
We're grateful to you. Thank you, Srinivas.
Okay. Yep.
Thanks,
Srinivas.
So I'm also recording this one, so I'll share the link with you, Srinivas. Maybe you can also share with your friends and who's not part of this mastermind. They'll also get benefit.
Oh, sure. Yeah, sounds great.
Yeah.
So, Vamsi, you are asking, I can share my, AWS thoughts. These many people are taking the certification, I think,
Absolutely.
I can share my 2 cents,
Sure.
Next Sunday.
Absolutely. I think that will be really, really helpful. I'll also announce that like not everyone in the call, we got about like close to 19 people in the mastermind. So pretty much everybody will come.
Yeah.
Give a little teaser now. What's your background, what you do, so that people will come for sure.
So something similar, right, Venkat? You can create on YouTube like a Karan Johar or Rajamouli. So this is me, just like see. We'll do all the marketing.
I'll give him a teaser. So basically, Venkat is very passionate about educating people and technologies and things like that. So he is not about using them. He is also about everybody using them and getting benefit of latest technologies. So he trained thousands of people till now, and he'll be keep training that